Hi, welcome back to my final morning report chart appraisal on Tuesday, the 1st of December, with me, Richard Perry, market analyst at Hantec Markets. Let's look at gold, and we've had a bit of a recovery in gold, as we have had on several of the FX pairs. So this is a dollar-related play, and the correction against the dollar we saw since the Chicago PMI yesterday afternoon was so disappointing. And it's not really surprising because obviously we've had such weakness in the gold price that any sort of hint that perhaps there was a sort of a chink in the armour of the US rate hike would see a sort of a move against the dollar, and that's what we've seen in the last sort of day or so. Rally off 52, 152.50, which sorry 10.52.50. Of around about $20 actually, so quite a strong rally that we've seen, and it's another $6 up today, up towards 1070. So this move is now testing this downtrend channel that we've got in place. But is it anything more than a dead cat bounce? Well, we've got a slight improvement in the momentum indicators, but again, I'm not really seeing this as a major improvement yet. I think that much more needs to be done because there's so much overhead supply on this gold chart. Just zooming out here, in the last few days, you've seen sort of series of key supports broken. 1080. And then 1065 was the resistance. Sorry, old support that's broken. You're now back into that as a resistance band. So 1080 is the next sort of level of sort of where the big support, big old support, which turned into new resistance, comes in. And you've got so much overhead supply that I'd be still thinking that this little rally is a chance to sell. You had this sort of recovery scenario happened a couple of times over the last few weeks, really, just taking it from the sort of early mid-November one, sort of 74 up towards 1098 again. That would be what, $24. You had a rally of 64 to 85. Again, that's $20. And again today, in the last day or so, we've had 52 up towards 74 again to $22. So that seems to be the sort of size of the recovery that we get before the bears start to come back in again. So that's interesting in itself, I think. We're having already the stochastics have given a bearish divergence. If I take my crosshair and zoom in here, you've got this sort of sequence of higher highs on the price, but lower highs on those stochastics. You've also got that seeing coming through on the MACD histogram as well. These lines here, which are the distance between the two MACD lines, the histogram giving a bearish divergence as well. So maybe this is sort of playing out as a bit of a bear market rally that will be sold into on gold. The likelihood is that I think that the dollar strength will sort of re-engage at some stage in the next sort of day or so in front of the payrolls report. And subsequently, I think that the gold price will fall away again. So this little mini rally, I'm thinking the fact that we're back up into such significant overhead supply is likely to now give the bears another load of fuel to sort of play their short positions with. So with that in mind, I wish you good luck in your trading, and I'll speak to you again tomorrow. Thank you.